And welcome to another YouTube video here at Lit Capital. You're here with your host, Pastor Pips, and in today's video, we'll have another lit tip. I'm going to be going over how to backtest correctly, okay? Now, make sure to check out www.litcapital.co.uk to check out our website and to start your trading career here. All right, cool. Let's head over to the charts. First things first. So first things first is you need to ask yourself, what is the market showing you, okay? This is not something that, in terms of backtesting, let's just say you got a new strategy that, you need to test out, whether that may be market structure, institutional candle and whatnot. And in today's video, this week's video, I've got some of the students here. We got James, got Jules, and we got Dante. Say hello, everyone. You guys can take yourselves off mute, by the way. Okay.
Money day.
Money day. Thank you. Money day. All right, cool. So moving swiftly on. First things first is you need to ask yourself, what are you doing on the chart in terms of, do you need to backtest something in terms of one specific strategy, or are you trying to backtest your whole trading plan and your whole trading in terms of like how you're going to get into a trade setup, for example? So you need to ask yourself, what are your confluences? First things first, okay? So here at Lit Capital, our confluence is going to be market structure, which is the be all and end all, which is number one. It's going to be institutional candles or institutional levels. Thirdly is going to be our Fibonacci. Fourth is going to be our liquidity. And last but not least is going to be our imbalance, okay? So of course, it's important that we are using the line chart whenever we are looking at market structure, okay? So we need to identify for ourselves, what is market structure currently showing us, okay? And, in terms of backtesting, I would prefer for you guys, to go way back in time, somewhere completely random and backtest from then. You don't want to really see what's going on right now. You can, but it's not a problem. So we're going to start from 2015 and I'm going to identify the structure. Okay, so first things first is I can see that we've obviously broken structure to the downside. Okay, so we've now actually become bearish. Okay, so I'm going to make sure that I keep that in mind. What you can do for yourself is you can just put in a text and just be like monthly bearish. Okay, and all you're going to do is you're going to go through the time frames and try to identify what the structure is. So what are we weekly as well? Weekly, we are also bearish. Find out on the daily also. And the daily, we are also, surprise, bearish. Okay, cool. Well, hopefully there's enough data for me to go low enough. Okay, cool. 8 hour is also bearish, okay? Now, it's important for us to understand, what the higher time frame bias is in terms of, because the higher time frame moves the whole picture. So understanding that the market is fractal, there's going to be a picture inside of a picture. In order for all these other time frames to change, understanding that the daily will have to break from being bullish to bearish to the weekly and then eventually show on the monthly. Okay, first things first is we've sussed out our structure. Okay, of course, we're going to head back to our candles. Okay, and I'm going to go from the monthly time frame. Remember, I'm always working myself from top to bottom. I'm going to see if I can identify any sort of higher time frame point of interest where I need to keep my eyes out for. So first things first is I can see that zone down there. Okay, can I identify any other liquidity zones where prices may want to potentially come and take out at a future date? So officially, we already have this zone here to target in case if we are able to catch any trades in this downturn here. Now I'm going to head down to the weekly. Okay, can I notice anything in the weekly time frame or on the weekly time frame? Well, we still do have this outstanding liquidity. We do have this imbalance sitting right here. That price is currently just filled. Is there anything else that I can notice? Remember, we're using historical data to gain an understanding or a better understanding of what could happen next. Okay, now, can I notice anything else? Maybe we may see a potential bounce from this zone here, maybe for a minor retracement if we can get that. Let's head down to the daily. Okay, cool. So the daily. Now, the daily is where you actually start to find your setups. Okay, so remember, if you actually find a trade setup for that time frame, understand that you need to manage that trade setup on that specific time frame. So if it's a daily setup, you need to manage your trade on the daily time frame. Now, first things first, obviously we've got the lower time frame zone. We've got a point of interest here. We've got some imbalance, looking for a retracement to then come down lower. We'll just have to see if price actually gets down there, but we've got some liquidity for price to take out also. It looks like over here, price may just react out of this imbalance, and of course, you need to back test and pretend as if it's live, okay? Like you're trading in person, and you're going to ask yourself a series of questions. Would I have taken this trade in person? In terms of if this was live, would I have taken this trade? Would I have gotten FOMO and decided to take this trade? For me personally, I would have just left it be alone, because this is the daily time frame. There's a lot of pips in here, so I'm just gonna chill. Okay, I'm gonna make sure that I wait and I anticipate my area that's down below, okay, for a potential bounce. Okay, so now that we've actually seen price come into that weekly zone, I'm now gonna go down to the 4-hour zone here. Okay, now is this a case where I would have just taken the trade willy-nilly? And the answer is no. Even if I head down, there's no more price point. Okay, cool. Do we have 2-hour? No. Okay, cool. We're stuck on the 4-hour. So would I have taken this trade willy-nilly? No, I wouldn't have. Is there any other areas where I could have potentially catch a retracement for price to come down lower? Okay, this daily zone, come down to here. Okay, and we can see that we've actually got some more imbalance sitting within this daily candle here. Okay, so first things first is I could potentially look to take a trade setup off of this zone here. And remember, we're back testing, so there's going to be a series of trial and error. Okay, now where could my potential take profit be, and where could I exit the market? Potentially I can target the imbalance. Okay, quite like this 4-hour zone here also. So remember, there's going to be many point of interest. There's many areas where you will look to get into the market, and it's just up to you to play your setup. I could sit here, like the great thing about trading is I could sit here, mark out my zones, and just wait for price to come to the zone. And whatever happens, we just need to make sure that we're taking the trade setup. Okay, so what we now do is remain patient. So it looks like prices may want to actually come back down into the zone here. Now it's important, guys. Yeah, what is the overall structure? Are we bullish or are we bearish? Okay, so if I understand that we are bearish, okay, I'm gonna half my risk at my buys, and I'm gonna use my normal risk at my shorts. Okay, why? Because the overall structure is bearish. We just saw the daily is bearish, the monthly is bearish, the weekly is bearish. Okay, so there's no real reason for you to be changing your bias like that. Okay, so as we can see, we saw the price tapped a bit of this imbalance down below. Okay, and we actually saw price come and play into this 4-hour candle zone, and we've actually seen a 55 pip push. Okay, and just like that, we've actually hit our 1-to-3 risk to reward ratio. Okay, of course, remember, another thing that you can do in terms of improving your trading strategy is, once you've been able to identify the zone, okay, understand the overall trend, the overall structure. Okay, there's no reason why you can't target the lows of price. Okay, there's no reason why you can't turn that 1-to-3 into a 1-to-6, or even potentially once you start adding Fibonacci, potentially increase your take profit even further. But I'm not going to go through the fib in this video. Okay, so cool. We've been able to catch a decent move over there. Okay, remember, we're using half our risk for this buy. Okay, so now this buy zone, after filling the imbalance, price has actually reacted out of it, out of this institutional candle, and we've seen price push up and hit our TP. So we've got 6% to 3%. Okay, so now overall that is 9% gain on this move. Okay, so remember, understanding that the overall structure is bearish. Okay, we just need to relax and try to identify any other zones, any other areas where we could potentially get a retracement. So I could look at the zone here for a potential, just a minor structure pullback and a continuation. Okay, so remember, we're just gonna make sure that we are actually, taking these trade setups once we see them. Okay, we're not waiting for the market to fly, 2,000 pips before we look to enter a trade. Okay, let's see if we get a play out of the zone. Okay, cool, perfect. We get a nice mitigation out of the zone. Okay, let's see if we can get some lower time frame. No, we can't get any lower time frame. That's cool. But just like that, 1-to-3 R&R. Okay, remember, which I'm actually forgetting to do so myself, is we actually have this higher time frame liquidity zone. Okay, so this is how you can start to potentially swing trade, okay, and have higher targets. You know, there's no reason why you can't twin trade this. Okay, maybe leave 0.5%, even from the entry from up here, to target this weekly liquidity zone that I have marked out here. Okay, so remember, we're keeping our risk the same and being able to target a greater amount of pips. So we'll see what happens in terms of this zone here. Okay, cool. So what we can see happen at the zone here is we actually saw a break-even trade, you know, 70 pips. We saw price slap back. Okay, I'm gonna go to the 8 hour so that I can understand the picture a little bit clearer. Okay, cool. So the 8 hour, this just looks like we actually just got a bit unlucky and we got slapped out of the trade. But nonetheless, you know, break even, that is absolutely not a problem. So from this zone here, we're actually seeing the market slide down continuously. Okay. Remember, always keep on trying to find your little areas where you can potentially get into a trade for a pullback and a continuation. All we're doing is just waiting for the market to give us moves and we take our trades. Okay, so we've got multiple rejections from the zone, got some nice moves. Okay, go from this 8 hour zone down here, we've got some imbalances. Just have your trade setup ready just in case price comes down and taps you into your trade setup. Okay, and guys, remember, this is just a little taster into how to, of course, backtest. There's going to be a little bit more to go through that I will go through in a different video in terms of how to look a little bit more in detail in terms of your entries and how you can potentially enter the market. But yeah, guys, remember, this is just a little warm-up video, a little taster. I hope you found this informative. Remember to give it a like, comment, and subscribe, and hit that bell notification to get notified whenever we do post a new video. And with that being said, you know the vibes, it's lit side. And remember, every day is money day. Guys, finish it up. Every day is
money day, money day.
Yes, sir.